We appreciate all of the guests who have appeared on our show and sincerely thank them for providing you, our audience, with useful information. However, the advice our guests provide is theirs, and we encourage you to seek out a professional if you have specific questions about any topic we cover on the Crushing Debt podcast. On this week's episode of the Crushing Debt podcast, the Student Loan Planner.
Welcome to the Crushing Debt Podcast with your host, Florida attorney Sean Yesner, where our goal is to help you get rid of the financial bullies in your life.
So welcome back to this week's episode of the Crushing Debt Podcast. My name is Sean Yesner, owner and founder of Yesner Law, and I have a student loan episode for you this week, and I have a guest for you this week. Now, before I get there and introduce the guest, I do want to give a plug to our sponsor, Sam Cohen with Attorneys First Insurance. Those of you that are longtime listeners know that Sam provides errors and omissions insurance, malpractice insurance basically, for attorneys and title companies all over the country, but I know that right now he's focusing on Florida and Texas specifically. So if you're an attorney or a title company in Florida or Texas, or if you want to support the show and you know an attorney or title company in Texas, I would love an introduction to Sam Cohen. You can reach him, sam@attorneysfirst.com or www.attorneysfirst.com, and that would be a big help to me and a big help to the show's sponsor. But I wanted to talk this week about student loans, and I have a guest with me this week. So he holds both the CFA and the CFP designations and is a University of Michigan alumni. We had a great conversation about college football and college basketball and University of Michigan and Florida State, and maybe we can get into some of that later in the show, although it's off topic. But he loves helping borrowers as a senior consultant for the Student Loan Planner and specializes in making plans for professionals with $200,000 to $400,000 of household student loan debt. When he isn't working on student loans, he helps parents find money in their budget to save, invest, and pay back debt, even if the cost of raising kids is breaking the bank. He himself has 3 kids. He enjoys playing basketball, watching superhero movies, and being active in the community. Welcome my guest, Rob Bertman. Welcome, Rob.
Hey, Sean. Thanks for having me.
Yeah, so I wanted to, like I said, talk about student loans. And I think the first thing that I wanted to talk about was the Student Loan Planner itself, the website, which you can find at studentloanplanner.com. So just sort of the 50,000-foot overview. What is the website? How does it help? And how do you help people in terms of the Student Loan Planner?
Yeah, it's a great question, and thanks for asking. So our mission is really to help six-figure borrowers pay back their debt in the optimal way. And ideally, student debt is a huge epidemic out there. There's over 3 million people with six-figure student debt. Most of them are graduate level professionals. And what happens is people feel like they have to sacrifice their career and their family plans for their student loans. But really, there's a way to design their student loan plan around their career goals and around their family plans or goals. So our purpose and our mission is to make student loan repayment much more accessible, much more less of a burden on everyday life, and help educate people and help them create customized plans so that they can live their lives, build their careers, build their families the way they want it, and have student loans sort of be something that's in their lives, but not driving their lives.
Okay. And with the CFP and the CFA and all the designations, you're looking at a whole plan. So not only the student loan debt, but what kinds of income do they have coming in? What kinds of expenses do they have to pay? All of those things, right?
Yeah, the primary drivers during the individual consults, which are about an hour long, we cover mainly just the student loan repayment aspect, but oftentimes there is another financial planning aspect around that. We don't technically offer financial planning or financial advice or investment advisory services through Student Loan Planner, but we definitely have all 6 of our consultants have either the CSLP, which is the Student Loan Professional Designation, a CFP, a CFA, an MBA. We all have advanced designations, so we can help not only with student loans, but how it fits into the overall life, overall financial plans.
Okay. And I know I was poking around on the website, and so there's information on the website. I would definitely suggest if you have questions about student loans, go to studentloanplanner.com. There's information on the website. Get help before you have student debt, get help after you have student debt. There's blogs. There's a podcast. So there is the Student Loan Planner podcast, which I assume is on every major Spotify and Apple and all that other stuff. Or you can go to the studentloanplanner.com and you can follow the links. There's also a YouTube channel. And so there's a ton of information, tools that you can use, calculators, courses. It looks like it's a pretty comprehensive website.
Yeah. And the blog posts too are designed by profession. So obviously lawyers might have different loan repayment and career things that their careers that will impact their repayment different than a doctor might, or a veterinarian might, or a chiropractor, or a dentist, or a physical therapist, or something like that. So on the blog post, if you're an attorney out there listening, you can go through and look at the blog post specific for attorneys too.
Okay. Or if you're a doctor, or if you're a, whatever profession, I assume.
Exactly right. Yep.
Okay. So one of the things that sort of intrigued me when I got the email, introducing us, said Rob can discuss the ins and outs of the complicated student loan system. So why don't we, I've talked a lot about student loans on the show. I've got a lot of episodes. I've talked about it myself. I've talked with other attorneys that handle student loans. I've never spoken yet. You're the first one that is not an attorney that helps people with student loans. So again, just sort of from the 50,000 foot overview so people can get an idea of what's going on. Why are we in this epidemic within the student loan system?
I mean, there's a lot of factors that go into it. Guaranteed federal student loans, guaranteed by the government. We've got graduate level schools that are increasing the cost of tuition, and there's no cap on what borrowers can borrow for graduate school. There's a cap on how much they can borrow for undergrad, but not for graduate school. So that's why typically, you see the graduate level professionals, people with masters, people with doctorates, have a whole bunch of student debt out there. So that's part of the problem. Another part is that the rules are so complicated, and the rules of engagement for student loans are unlike any other kind of debt. Credit card debt, auto debt, mortgage debt, personal loans, whatever the case may be. Student loans operate by a totally different standard of rules. And so, yeah, you can go ahead and, pay it back the old fashioned way where you just get super aggressive, refinance to get a low interest rate and pay it off as fast as you can. But there's also the wrinkle in there is that student loans, you can pay based upon your income on an income-driven repayment plan. And then there's a whole host of student loan forgiveness options out there. Most are taxable loan forgiveness, meaning that the loans are forgiven, but you pay taxes on that forgiven balance. But there's also public service loan forgiveness, which is tax-free loan forgiveness. And so the combination of being able to pay based upon your income with either tax-free or taxable loan forgiveness make it so that you can design, depending on how much debt you have, you can actually think of it like a tax on your income rather than as like a debt that you have to pay back based upon how much you owe.
Right.
So those are the real main differences and why it's so complicated, different than any other kind of debt.
Well, and then you look at government-backed versus private loans, adds another wrinkle in there in terms of what we can do to help people get rid of private student loan debt versus student loan debt that's backed by the government and those types of things. How do you... And without, giving away the farm, and I know that everybody's different, every situation's different, every fact pattern's different, but what are some things you look at to help people pay down their student debt while they're also planning for the future, for retirement, for, whatever it is they're planning for?
The number one factor is their student debt to income. And when I say debt, I actually mean how much they owe compared to how much they make. So anyone who owes, our ratio right now is 1.25, or more compared to their income. So, someone making $100,000 who owes $125,000 in federal student loans or more, those we're going to explore the income-driven repayment plans with either taxable or tax-free loan forgiveness. And for anyone below that ratio, typically, unless they are eligible for the tax-free loan forgiveness, we're going to be exploring more of the aggressive repayment strategy for them. So that's factor number one, is their debt to income. Factor number two is what else is going on in their financial life. So do they have credit card debt? Do they have an emergency fund built up? What's their income and expense situation? Because, student loans, federal student loans, because of their flexibility, if someone needs some time to build up their financial foundation, they can actually do that with federal student loans. And it might even be better to put the loans on hold in certain situations to take care of credit card debt, build up a cash cushion before actually tackling the student loans. So we take a look at that. Third factor is their career plans. Are they going to work in a stable job, a sort of a paycheck job? Are they looking to jump into their own private practice or business? Are they are they married, or are they planning to get married? And does their spouse have student loans or not? There's a whole host of factors that go into it, but the primary one is the debt to income, followed by, the other things I discussed.
Okay. And I know that some of the factors here, we talked about this beforehand, but, we're recording this hopefully at the end of COVID. and I know that here in Florida, actually nationally, we've got a foreclosure and an eviction moratorium that, at least for now, both expire July 31. They were going to expire at the end of June. President Biden extended them to the end of July as we sit here and record. I was always of the opinion that the student loan moratorium is right now set to expire September 30. I was always of the opinion that the three of those would sort of track each other, that the eviction and foreclosure moratorium would be extended to September 30 to sort of match with the student loan moratorium. But we talked about, there was some sort of big breaking news yesterday, specifically about student loans and student loan servicing. You want to go over that?
Yeah. So there are a host of federal student loan servicers. So there are really four primary ones: Great Lakes, Navient, Nelnet, and FedLoan. There are some others too, but those are kind of the primary ones. And FedLoan just announced yesterday, I guess that's Wednesday, July 7th, as we're talking, or I'm sorry, Thursday, July 8th, as we're talking,
right?
that FedLoan is not going to be renewing their contract with the federal government by the end of the year. So this was kind of a shock to the Department of Ed, because FedLoan, normally loan servicers are clamoring to get these contracts because they get a whole influx of customers. They get paid by the customer, and so you think they want it, but FedLoan kind of backtracked. And part of the thing why this is important, because there's around a little bit less than 10 million federal student loan borrowers that have loans at FedLoan servicing. They're also the primary loan servicer for public service loan forgiveness. So by mid-December, their contract expires, and the federal government, the Department of Ed, is going to have to find a new loan servicer to take on these close to 10 million borrowers. And that's not going to be an easy task. So where we thought that there was a high likelihood that the moratorium on student loans would end on September 30th, now it's sort of murky, because there's a whole bunch of borrowers that would be, there's 45 million people out there with federal student loans. About a quarter of them are at FedLoan. And so, basically they have to find a home for these. So the question is, would they turn on student loans 3 months before that contract expires and then turn on the payments and then shift to a loan servicer? Or would they push it back because it affects so many borrowers, maybe to the end of December or January or even March, which they've been throwing around for a while, in order to make sure that this all gets handled and then turn the student loan payments on?
Yeah.
So go ahead.
Well, I was going to say a couple things in there that I sort of want to unpack. So I guess my first question is, why do you think FedLoan would say thank you, but no thank you? Any ideas?
Well, it's not the most glamorous job to be a federal student loan servicer, because there's a lot of aggravated people, and these government contracts, they sort of go to the lowest cost provider. And when they're not paying that much as they would make in other types of accounts, then the quality of training, the amount they're able to pay their workers and attract high quality workers is not as great. So what happens is a lot of student loan servicers have a bad rap for having poor customer service, because most of them aren't spending the money to train nor paying their workers enough to attract and retain like great ones. And then right now, of course, you have a super hot job market where people can kind of pick and choose where they want to work. Wages are rising. Some employers are paying sign-on bonuses, even at like fast food restaurants. And so I think they're kind of scrambling to find people to work. So, and I think in the press release, they said they want to focus on, they're based in Pennsylvania, and that's kind of the origin of FedLoan, the PHEAA. And they said in the press release that they wanted to focus on just serving Pennsylvania customers. Now, I think, I just think that maybe they're just tired of maybe dealing with the government, or maybe tired of, the repercussions or the negative press that they're receiving from the poor customer service that clients are receiving from FedLoan servicing. We don't know for sure.
Yeah,
but that's what they said in the press release.
Well, and I can't imagine that they would, do a lot of negative within the press release. They're trying to probably keep it all positive. You're not going to come out and start bashing the federal government in a press release, but
right.
But that makes. Go ahead.
I was going to say, as it relates to the moratorium, though, with student loans, it seems like there has been some pretty good bipartisan support to make it easier for federal student loan borrowers to pay back. So if you remember back in the last presidency, they put the freeze in through the CARES Act, which is a bipartisan effort that went through in March of 2020. And then former President Trump extended it through December or January, I think, of 2021. And then when President Biden took office, he extended it to September 30th. So what we've seen is both sides of the aisle, they have sort of wanted to make it easier for student loan borrowers. So we thought pretty confidently that this September 30th was going to be it, because we're not through the pandemic. There are obviously hot spots and still going on in the country right now, but for the most part, people are should be able to get back to work and be earning higher than ever wages come September. But with this, even before this, there was talk of extending the moratorium to March of 2022, and it could end up being that it either ends up being March of 2022 or somewhere in between. But all this uncertainty makes it really hard for borrowers to figure out, like, what should I do with my student loans? How do I plan for this? And I just wish that there was some certainty out there that people could then plan for at this point.
And any idea if Biden is going to get his push to forgive a portion of federal student loan debt?
Well, I think they're working on it, but it's kind of a complicated issue because, there's 1.7 trillion of student debt, and it affects 45 million borrowers. But really, there's only about a third of the U.S. population that has college degrees and that would have student debt in the first place. So if they're going to forgive, either the $10,000 or the $50,000, and typically people who earn college degrees, by the averages, they earn more than people who don't have college degrees. Obviously, there are plenty of exceptions. But so the question is, would they give this forgiveness to a third of the population for people that are typically higher wage earners anyway? Granted, the debt might put people back from people who never had college degrees in the first place. But what we think at this point in time is that there could be some sort of like targeting of the loan forgiveness. So kind of like what they did with the stimulus packages and the child tax credits that's coming up, where it's based upon incomes, where, if you have, maybe they'll give 10,000 of loan forgiveness for people under a certain income threshold, or 50,000 of loan forgiveness for people under a certain income threshold. But, they'd have a lot of explaining to do if, doctors and dentists who are multiple six-figure earners in general, by the averages, are getting $50,000 of loan forgiveness when the rest of the population is they're not getting that kind of a quote unquote benefit. So it's definitely tricky out there.
Yeah, it is. And then you've got the other side of the aisle, which is people that say, well, wait a minute, I paid off my student loans by working as hard as I did and making as much money as I did. So how come I don't get a benefit? And then there's the other counter argument that if you've got $200,000 of student loan debt, what's a $10,000 forgiveness going to really do? It's not even going to make a dent.
So it would not affect most people's plans.
Yeah. And then I would assume that this only applies to federal student loans. So somebody that went to like a trade school and got a private loan to go to a trade school, Biden's not talking about forgiving that person's loan.
Right, because they'd have to talk with the banks to get the banks on board, because that debt's owned by the banks as opposed to the federal government. Right. And obviously the federal government, if it's their debt, they have a little more flexibility on what they can do with it, where private debt, as you know, is much, you just have to negotiate with a whole different cohort of people.
Right, right. And I know we talked about prior to recording, I typically come at student loans from the legal angle, being the attorney, and you come at it from the, financial advising angle. And so I know that Congress is trying to work on putting things into the bankruptcy code to allow the discharge of student loan debt. I don't know that there's anything really, as we record this, that's been developed on that front. I did hear there's a handful of cases, bankruptcy cases, that are still coming down where borrowers are claiming some type of hardship that they cannot repay their student loan. And the courts are becoming more receptive to those types of arguments and discharging student loans based on this hardship discharge. But again, that's, if you're listening, get with a local attorney if you think that's your issue, because right now the different cases are developing in different areas, and so eventually this is all going to have to bubble up to the Supreme Court and have them decide the issue, or have Congress decide the issue. But I did want to sort of backtrack a little bit and just make sure, because I know I want to keep this so that the listeners, some of them are familiar, some of them are not familiar. So PSLF, that's a public service loan forgiveness, and basically is where somebody goes out into a public field, like the one I think I know the best is someone goes to work at a hospital in a low income area, for example. If they have the right type of student loan, they might qualify to get that loan forgiven if they work in that field for a certain period of time. Am I sort of in the ballpark of how it works?
Yeah, absolutely. There are really three check boxes that need to go into public service loan forgiveness. One is that the loans have to be federal direct student loans. So the majority of loans, in fact, pretty much all the loans issued by the federal government after 2010 are going to be direct federal loans. They're direct Stafford loans, direct Grad Plus loans, stuff like that. So those are the loans that qualify. Anyone who took out loans before 2010, there was a prior loan program called the FFEL loans, and 80% of loans issued before 2010 were FFEL loans. So if anyone has loans from back then and their loans are FFEL loans, they are not eligible for PSLF. They can be eligible through consolidation. So if they consolidate them within the federal program, it then wraps all those FFEL loans into one or two, direct consolidation loans that stay in the federal government. And then those will be eligible for PSLF. So checkbox number one, direct federal student loans. Checkbox number two is being on an income-driven repayment plan. So if you're on the extended plan or the graduated plan or the standard plan, which are plans based upon how much you owe, not how much you make, those plans don't qualify with the exception of the 10-year standard plan. But if you're doing a 10-year standard plan, you're going to pay off the loans in 10 years anyway. So PSLF won't make a difference. So the types of loan repayment, income-driven repayment plans that would qualify are ones called like pay-as-you-earn, revised pay-as-you-earn, or IBR, income-based repayment. So those are the three primary ones. Repay, revised pay-as-you-earn, and pay-as-you-earn, pay. Those are 10% of what they call discretionary income, and IBR, income-based repayment, is 15% of discretionary income. So they have to be on basically one of those three income-driven plans, along with having direct federal loans. The third leg of that is that they have to have qualifying employment. So what is qualifying employment? That is considered full-time, the greater of full-time by your employer, or 30 hours or more of working. But if you're a 30-hour work week, if you work 30 hours a week, but you're not considered full-time, you need to be considered full-time in order to qualify. So, and then you have to work for a nonprofit, so typically a 501c3 organization, or a government entity. So, if you're a federal prosecutor, or if you're if you work for your city or your state as a prosecutor or defender, those jobs qualify for PSLF because you're employed by the government, as well as any type of nonprofit type of work.
Okay.
So if you meet all three of those criteria, direct loans, income-driven repayment, qualifying employment, you have to reach 120 months of payments. So 10 years of payments. It doesn't have to be consecutive, just has to be cumulative. So, and after you reach those 120 months, whatever loans are left over get forgiven tax-free. So it's a really great deal, and it actually lowers that ratio of debt to income that we would want to take a look at income-driven repayment, probably to, they could have debt that's 2/3 or 3/4 of what they actually owe. And with PSLF, it's such a powerful program that it might make sense to pursue it rather than pay off the loans in full.
Right.
So I don't know if that was too much detail, but
no. That was perfect. Although I do know under some of the IDR plans, some of the income-driven plans, if the numbers work correctly, it's possible to have a $0 payment that also counts towards your income-driven repayment plan. So you're still considered as making your payments, even though the math works out that your payment is zero. do you know, does that also qualify you under the 120 payments under the PSLF?
It does, as long as they're calculating your payment based upon your income. There's kind of like a standard deduction. It works on a calculation called discretionary income. So what they do is they take your adjusted gross income, not your gross pay, but like after pre-tax retirement plan contributions and all that stuff. That's your adjusted gross income. Like anything like mortgage deduction, donations, or standard deduction, that comes after AGI. So that does not lower your student loan payment. So then after they take your AGI, they deduct what's called, 1.5 times the federal poverty level based upon your family size. So if you're single, it reduces the income that they use for the calculation by about $18,000. If you're, and then it's like $25,000 for family size of 2, $30,000 for family size of 3, and so forth. So if you're a public defender and you're earning $40,000 and you have, and you're married and have, a child, chances are your payment would only be based upon, after that $30,000 deduction, about $10,000 of income. So your payments could be less than $100 a month, and those would count toward public service loan forgiveness. Or if you're in between jobs, it wouldn't quite count. But if you lose your job or you're in between jobs and you adjust your income driven plan to 0, then you get a new job within the next 3 months, your payments would still be 0, but as long as you're working full time, those payments would count also.
Oh, wow. Okay.
Yeah. There's a lot of little nuance, and I don't want to say tricks, but because they're all within the rules, but there's certain ways within the rules to really minimize how much you're paying toward the student loans and maximize forgiveness.
Right. Which is why it's so important to talk to somebody like you, somebody like me, so we can try to handle, and bankruptcy is clearly not the only option, and negotiation's clearly not the only option. So, it's good to have these different options to see how it is that you can help someone, if there's a way that I can help them navigate the legal process. But the sort of one of the last things I wanted to just make sure everyone remembers, under the CARES Act, under the moratorium for student loans that ends September 30, there's a few things that apply there. So number one, payments are not due. Number two, interest does not accrue. And I know I'm probably forgetting some other stuff. So do you remember what's covered by the moratorium?
Yeah, sort of think of it like, so any federal student loans that are held by the Department of Education they're kind of frozen in time. They've been frozen in time since March of 2020. So for the last, 16 months or so, they haven't grown and there have been no payments due. Those 0 payments do count toward the income-driven repayment, 20 or 25 years towards taxable loan forgiveness. They also, if you're working for a nonprofit, count towards public service loan forgiveness too. So even though the payments and the interest are on freeze, the payments are still, counting. And same with if someone was in default or anything like that, in order to rehabilitate the loans, this counts towards those 9 months of payments to rehabilitate the loans without having it really an adverse credit effect too.
Right.
So it's been great for a lot of people. Now, I will say though that if the long-term plan is to pay as little as possible and get as much forgiven as possible, so if you owe that more than 1.25 times what you owe, but you've been making payments, you don't have to. And you can actually go back to the loan servicer and ask for a refund of your payments. Oh, so wow. We've had some people that were on track for PSLF and they had paid, $5,000 to $10,000 because they wanted to make sure they were still getting credit. And we told them, call your loan servicer, request a refund because you're basically throwing $10,000 at something that's cost you 0. And it's very clear language on studentaid.gov that these payments count toward PSLF.
Wow.
So if you have been making payments, but long-term forgiveness is the way to go, or if you have credit card debt that you want to clean up, you can get that money back and apply it towards something else that's going to bolster your financial future rather than throwing at your loans when it's not really all that urgent right now to do so.
Huh. That's interesting. I didn't know that. What I had always been telling people is if you're not on a PSLF track, or if you're not on a income-driven payment plan track, if you're just, I have a federal student loan and my payments are affordable and my job provides me enough money that I can pay them every month, I've been telling people to continue to pay because even though interest isn't accruing, every dollar you send in is now chunking down the principal balance. So when the government turns it off and they start to want their payments again, you will have greatly reduced the principal balance of the loan. It's basically a 0% loan at this point.
I would agree with that. I think that's exactly the right way to take it. Assuming that if someone doesn't have credit card debt and that they have, enough savings in the bank, to weather a storm of any kind, and that they have job security, then yeah, if you're going to pay it off, get going, So I think that's totally fine advice to give somebody in that situation. It's the people that have prospects for loan forgiveness, whether it's taxable or tax-free, that it doesn't make sense to do it. But right. In your situation, that makes complete sense to do that.
Got it. Well, good. It's good to know. Good to confirm that I'm giving the right legal advice. So thank you for that. Well, as I know you've got sort of a hard stop coming up, and you were getting towards the end, I think. Is there anything I didn't mention? Anything you want to mention or that I forgot to mention?
It's a good question. I would just reiterate that no matter what student loan situation you're in, that there is a way to design the repayment strategy around whatever you'd like to accomplish in your life. So don't feel like the loans have to be a burden and control your decision-making. Especially with federal student loans, there's a lot of options for you to design the life you want and have the student loan plan built around that. So just kind of keep that in mind. We're here to help. So if people go to studentloanplanner.com, they can look at, the free content. They can explore what it looks like to have a 1-hour consult with one of us. There's calculators. If people are looking to refinance, we have a refinancing page with some of the best cashback bonuses out there. But bottom line is, student loans don't have to be a burden. And there's a way to figure it out. We're here to help any way we can.
Well, cool. Thank you. I appreciate you being a guest on this week's show.
Yeah, thanks for having me, Sean. And I hope this was very valuable to everyone out there listening, and hope to help any way we can.
Yeah, no, I appreciate it. Thank you. So again, if you want to contact Rob, www.studentloanplanner.com, or you can go to their podcast, which is also called the Student Loan Planner, although there's also links to that on their website. You can find them on Facebook under Student Loan Plan. You can find them on YouTube. So go definitely check out the resources there that are available if you're struggling with your student loans. But I think for now, I think that will do it for this week's episode of the Crushing Debt Podcast. So thank you, Rob, for being a guest again. I appreciate it.
Yeah, thanks, Sean.
So like I like to wrap up every episode, and sometimes I nail it and sometimes I don't. I hope that at the end of the month you have more money rather than at the end of the money you have more month. Certainly studentloanplanner.com can help with that. So that'll do it for this week's episode, and we will catch you in next week's episode of the Crushing Debt Podcast.
If you have questions that you think would make a great topic for a future episode, please email Sean or connect with us on social media. Sean Yesner and Yesner Law, PL, are Florida licensed attorneys. The information contained in this week's episode is not a substitute for legal advice. Your situation may differ, especially if you are located somewhere other than the state of Florida. If you have questions, please contact our office or contact a local attorney. Thank you for listening to this week's episode of the Crushing Debt Podcast.